Hey everyone, welcome back to Cover Calls and Short Puts. My name is Mike Fairbourn. It's great to be with you today. Joining the chat by my colleague, manager, Brett Crowther. Nice to have Brett on board with us, folks. Any questions, comments you have, definitely throw those into the chat box. Folks, today we're going to be talking about, specifically looking at using the stock hacker to find volatility, maybe potentially higher volatilities amongst short puts that are out there, comparing those and really kind of breaking down the details as to why, all else equal, a higher volatility could be of interest, could be of value to a short put seller, all things being equal. But having said that, let's go ahead and get started. Let's hit some disclosure items so we get the show on the road. Folks, options do carry a high level of risk. They're not suitable for all investors. Please keep that as well as other points in mind here. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Investing does involve risk, including the loss of principal. Short options can be assigned at any time, that is, any time, up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. We'll get into those details in a little bit here in just a second. paperMoney software application is for educational purposes only. Successful virtual trading during one time period does not guarantee successful investing of actual funds during a later time period. Market conditions change constantly. And final slide here, wanting to state that there are risks associated with investing in dividend paying stocks. Believe it or not, we'll be looking at some of those that still do pay a dividend. So just as a side note there, in case we dive into it, that would be including, but not limited to, the risk that stocks may reduce or stop paying dividends. Rolling strategies can entail additional transaction costs, which may include multiple contract fees, as well as which may impact any potential return as well. So with that, let's go ahead and do this. Let's share our desktop and get started here. All right, very good. Well, let's go ahead and take a look at the S&P 500 index just quickly here before we get going. You don't want to spend too much time on it, but it's always good when we're looking at short puts, potentially, placing those trades, looking at kind of neutral to bullish type conditions in the market. We could see over here that the trend, and that would be, looking at the trends can be sideways, they can be up, they can be down, but the trend, and this is really over a longer term chart that I've noted up here on a 5-year basis, well, we are making, higher highs and higher lows. We have not yet breached that 6,000 level. That might be really kind of the next big round number some traders, investors might be keeping an eye on, but we can look at a shorter term trend and just kind of show you here that we've made higher highs, higher lows. This is an all-time new high that we did make just a little bit ago. That might have been towards the end of the prior week. That would be a couple of weeks ago, but we're right in that range right there. And we're kind of holding flat, aren't we? We've seen a little bit of this pattern, which is kind of conducive to the sort of scenarios and setups that traders like to look at, broadly speaking, with their own individual stocks. Because if the price of the trend of a stock is going higher, right, all else equal, we're trying to get, prices to go up or sideways, maybe heading above a short put range or zone or an area or strike price specifically that we had sold a put at. So really looking at some of the dynamics of an upward trend to maybe help big picture with maybe additional probabilities of success, potential of success of prices holding above that short strike range. That would be, an underlying stock going higher or staying above that level. Now, we're looking at the market here, and obviously we're looking at the S&P 500. If the 500 itself, many companies in the 500 are trending higher, making higher highs and higher lows. Possibly some of them might look like the S&P 500 coming into maybe a flag type formation here. Well, then selling puts could be of interest because, as we said, neutral to kind of bullish strategy, folks, on that. Okay. So having said that, let's go ahead and take a look at a couple of different things I wanted to point out first. When we're looking, though, at the markets, broadly speaking, it can be helpful also to look specifically at the given sectors. And what's interesting, we've talked about sectors in this class. We've talked about looking at the performance of the sectors, right? And seeing how they've been doing over different time frames. Here happens to be a 1 week performance metric. This is going back 5 days, so it actually includes some of today and then back to, I guess, a portion of last Monday, really is what we're looking at here. But if we come down here, we have a snapshot in time, don't we? Of, let's say, for example, the S&P 500 indices right here and how the different sectors have been performing, right? If we break it down from the market, where is the strength in that market coming from? We saw strength in the market. We saw a bull flag potentially forming here. Where might we be seeing strength at? Well, we can look at the Market Watch tab. We've got up here, main tab, Market Watch. We've got sub-tab quotes, and I've just thrown in the S&P 500 sectors in here to take a look at that. Of course, we can sort this out just by clicking on the column up top, and we can see what's been performing over the past 1 week. Consumer discretionary did really well through last week. We could extend it to a longer time frame. Let me go ahead and just customize this real quick. Highlight this for everyone. So there's a 3-month time frame. I'll pull this up over here and throw that in the box. And how are we doing over a 3-month time frame? We can look at different time frames, but they're still, at the end of the day, just snapshots as to what's happening behind the scenes. If we really want to kind of drill down, wrap our arms around the idea and really trying to find companies that might have maybe some market strength, some sector or industry strength, and then finally stocks that might be positioned well as well, we can look actually at the charts themselves as opposed to just a little bit of snippets like how was it doing 3 months ago? What's the performance there? How about a week ago? We can actually go to our charts right here and we can go up top. And I've pulled up, I've built a little bit longer term grid. This is a sector grid of 6 months. And so it's got 2, 3, 4, 12, minus 1. So you've got all 11 sectors of the S&P 500 in here. S&P 500 is positioned in the bottom right-hand corner of the screen, as you can see right here. But looking specifically at recent market strength with a possibility of a flag pattern, where are we seeing sectors that might be of interest, that maybe have gone sideways a little bit, might be on the verge of breaking higher? Well, you could say something like up top here. By the way, I just check marked the S&P 500 because collectively all 11 of these sectors are really filtering into the S&P 500, right? I mean, that's what we kind of see here collectively, but some are going up, some are going down. Our job is to maybe highlight some of those areas where we are seeing strength. And I've got a great way to show you this today as we look specifically at the market stock hacker for higher implied volatility type stocks that are within the S&P 500 index. So as we come over here and take a look at this, look at the communication services group. So that could be one we could look at. I mean, you can see over here, price has gone up sideways. It looks to appear to kind of be breaking out. And that's collectively the entire group within there. There's going to be some stronger stocks, some weaker stocks, but collectively it's kind of forming a bit of maybe a sideways range or a possible flag pattern. Look up top with me at materials. We had a break over here, a higher high, higher low. Well, that's continued until we got kind of to this range. We're kind of in a, let's see if I can do that again, kind of in a sideways channel here, maybe holding a prior support level. That could be one we could look at. Whatever, you might be seeing, we have the tools to help you find this. And let me do this too. While we're on this, this is a, this is just a grid, but I want to go ahead and just share it so you do all have this in case you did want to get that grid. You can take a look at the grid and I'll put that into the chat here in case you like something like this. It can certainly save some time in building these out. And there you have it. There's the grid. Now, we always say our scripts aren't guaranteed for timeliness or accuracy, but this is actually a grid. These are just charts, right, that are coming through. And so as long as the data is coming through, we're just looking at individual charts, in this case, sector charts with the S&P 500 index down here as well. All right. Yep. Oh, AJ. Yep. You're okay. I guess I read your mind. You read my mind. I was going to get it posted out there anyways, but hopefully that can help save a little bit of time. And by the way, welcome to all of you just joining us here. Greg, Krishna, Randy, Will, others here, Riceberg, David. Nice to have you guys on board. And yeah, any questions again, comments, type those in the chat. How are you doing, Dragon Rider? Great to have you. All right, let's do this. So what we want to do, let's take it a step further now. we're going to take this down and we're going to work our way into the stock hacker. But before I do that, because the stock hacker specifically helps us within the scan tab, and we're talking about this section right here, the stock hacker, we're going to be using some option related criteria. But before we get into that, we want to talk about the higher volatility specifically and what that can mean to an individual stock. How does it influence the price through the option Greek, etc. Greeks? So with that, the first things first I wanted to look at is maybe the VIX itself. So the volatility index, where does the VIX stand relative to the volatility of the companies that we might be looking at? And why might that be important? Well, first of all, here is the VIX. And by the way, the VIX has been, you have to say, a little bit trending a little bit higher here. And so volatility, even on the dips, has been retaining higher levels and maybe on the verge, possibly, of breaking out above a range. And that range could be here. We don't know. All we know right now, we don't know if that'll happen. That's, that's going to be inverse to the market, generally speaking. So the markets would likely dip sharply if the VIX spiked sharply. Certainly can happen. That's been kind of the tendency of the past, right? But if we look over here, the VIX is really close to, we'll just say, approximately 20. So it's about 20. It's certainly off of its lows. We know that. We can see the lows. Oh, hang on a second. We can see the lows down through here. And these lows, I mean, a lot of times you can stay, we're about 12 in that range or so. It does dip as low as 10 if you go back even a little bit longer. So we're about, double the 10 level, but we're still relatively low if you're looking at, let's say, for example, a 5-year time frame. Where are we at? I mean, the VIX can go higher. Here we are at 20. You can see that there are ranges at 30. It can range up to 40. It can go up to 50. It can go obviously higher. These are significant spikes that you'll see in the VIX as we take a look at it. But right now, if we wanted to find companies that maybe had a higher VIX, had a higher volatility than the VIX itself, we could do a stock hacker scan for that. And why might we do that? Well, a couple of different reasons. Let's go ahead and take a look at a stock. I've used this so many times as an example, but here is Apple. Here is Apple. Let's clear this off here, and let's just see where Apple stands relative to the VIX itself. So just in our demo account here, let's look at the next month out contract. This is December 2024. And we've got over here, if you haven't seen it yet, we've got over here about a 27, approximately 27, a little bit higher than 27 implied volatility. This is our implied volatility column right here. Right there. There is our IV right there as it stands, okay? And we've got that, and you can see that it is higher. It is greater than the 20, right? Obviously, that we're just looking at approximate 20 of the VIX. So all else equal, it is higher. How could that stand to benefit us, all else equal, in selling our options? Well, if we come down here, one of the columns that I do have saved, and this is in the layout that I've got up here. It's just kind of a standard custom layout. These are the custom columns that I've got. You can see a few of the option Greeks in there, but there's the Vega specifically. And what that Vega tells us is that for every 1%, it's a little thick. Hang on a second. I don't know how that got moved. That is interesting. Okay. For every 1% increase in implied volatility, that will have an impact of moving the option up. And I'm just going to choose this 220 right there, the 220 strike. We're on the put side here. We're going to be looking at short puts today, as we mentioned, but it's going to move that option up approximately by the amount, this range over here of, you got it, 27 cents. Now, if you think about this, what happens then if we really adjust that implied volatility higher? Can we see what kind of an impact it has on the underlying option? We can. We can do that theoretically using the theoretical price up top here into the layout. Let me show it to you right here. It is one of the standard defaults you can select. That's the Theo price, which does look at a number of different option Greeks, or it can sort out a number of different option Greeks because we're looking at time, time decay, etc. But let's just say over a 1 week time frame, we were looking at this, and we're getting close to, well, let's go out to November now, and we'll just go out, let's just say a week from now. Something crazy happens and implied volatility adjusts higher. I'm going to make it really drastic here. I'm just going to say like 20 and just tab through it. Okay, so now my Theo price column will give us the impact if we were to add plus, that is plus 20, to our implied volatility. You can see over here, what's the impact to it? Look at the impact right there. That is the Theo price column. So you can see that it gives us an approximate range of about $8.55. That is just implied volatility. Implied volatility can move quickly. It can move around earnings announcement. It can move around news announcements. We are in the midst of earnings, so that's something to keep an eye on there. But it just shows you what that has to do with option pricing power. If this happened to be, 10, let's just do this. Let's just do 10, make it a little bit more realistic. Let's just say Apple is priced a little bit higher. We're going to add in 10, an adjustment of volatility of 10. Let's come down here now, look at that 220. You can see that it's still 567. So if Apple had a implied volatility of about 37 or so for this contract, and if we're looking at that, then we could say that this option would be higher. And if the option's higher, all else being equal, we could sell that for and try to potentially collect a higher premium, right? As opposed to maybe 340, maybe we're getting something close to 560. So a substantial difference just by having a higher implied volatility. Now, higher implied volatility can't mean there's just more volatility, so that's another thing you've got to be mindful of and potentially worried about. But let me try to position this a different way now. Folks, if we have higher implied volatility, could we sell this if we're okay? We might be getting a higher premium, obviously. Could we sell at different or specifically lower strike levels? Could we sell at lower strike levels and still get what we refer to as, maybe we'd be okay with capturing that level of premium? The answer to that is yes. So a higher implied volatility and the impact that that implied volatility has in terms of a 1% increase, right? And it works on the other way too. It works increase or decrease, but we're saying a 1% increase in implied volatility, how that's the option price is impacted by the Vega. If it's going to give us more premium, there might be room to sell at lower strike prices, all else equal. Because you're just saying, well, gosh, I'm getting all this premium. Why couldn't I just sell a little bit lower? So we've adjusted this. Let's look at the 220 for now. The 220 was right here. But if you were getting more premium, somebody might say, well, I'm fine just settling for this down here and just trying to maybe reduce the risk of assignment, right? Of prices not making to that level, because all I want to collect is the premium, particularly ahead of, right there, earnings. Earnings can be volatile. And so too, an implied volatility can really jump ahead of earnings. So that's interesting, right? That's kind of an interesting aspect. So all else equal, we could, as long as we like the company, we like the position of it, maybe it falls into a sector that we talked about previously, that's in line with the markets, maybe one of the stronger sectors that might be going sideways. Maybe there's some bull flags out there, bullish to neutral, right? Potential. Maybe that's an area we could look at on top of higher implied volatility, potentially higher premium. Okay, so before I do that, though, let's look at this. I'm going to click on this, click here. Many of you might not know this. I think many of you do. But if you just type in IMPV, it's not spelled out completely. It's not implied volatility, so be mindful of that. If you try to type in implied, nothing's going to show up. So very important. It's just IMP volatility right there. And that is your implied volatility. Now let's pull that up right now. Let me adjust this. We'll make it a little bit thicker. Yeah, green's fine. There we go. So there's implied volatility. And you'll notice that implied volatility can spike generally ahead of earnings. Look over here with me. See the earnings right there? There was a spike. I'm just kind of trying to highlight this range And so now you know what that means. When this line goes higher, what is happening to the price of the option, all else equal? A lot of things could be happening. There are other factors too, like delta, right? Delta measures the impact of a $1 increase in the underlying stock. The option will be impacted by the amount of the delta based upon a $1 increase in the stock, for example. And you want to take a look at those in terms of calls and puts. But looking over here, look at the spike. And what does that range look like? So you're right at that range. It's really close to 30. I would say 30, very close to it. Yeah, okay, there you go. So 0.29. And if we just draw that line through there, are we approaching kind of where we've been previously? That kind of is like one of the higher levels, with the exception of that spike right there, right? But we have to say that 30 is an area you're kind of trying to maximize maybe some of the points where implied volatility is the highest. And it's going to vary based upon different stocks. But you can clearly see here on Apple, just as just kind of a real-time example, that 30 is kind of a level that can be of interest. And then also after earnings, you get the pullback. And what impact does that have, right, on the price of the option? Well, all else equal, it's going to push the option price lower. But there are, like we said, other factors in there. In this case, prices went up. Now, that wouldn't necessarily hurt us, because if prices are going higher, well, the stock is still, moving away from a short put strike, for example. Right? Okay. And by the way, Apple's one we talked about a little bit ago. It's a little bit more expensive. We can certainly look at it today, but it's sort of, just still kind of testing this upper ascending triangle. Will it break above there? Earnings could play a big role. The interesting thing about it is that you are getting higher implied volatility than maybe that you normally would have, which is maybe closer to maybe this 25 level, maybe on average. Okay, maybe a little bit lower on some of these other reads, maybe about 20. So impact of implied volatility, but there it is again, ahead of your risk, of earnings. You don't always just want to wait for implied volatility to spike ahead of earnings. You'll notice over here that we did spike higher here. We got to that same level of implied volatility or whatever you might be looking for, but there were no earnings in that really kind of roughly 2-month period of time, even though we were at that level. Okay, so that is Vega. That is implied volatility here. What I want to do now is just do a quick switch back over to our charts. I'm going to take a look at the chat and see how we're doing there before I go any further. But it looks like Brett is keeping us going. Appreciate it, Brett. Awesome. And just seeing if I can show anything visually. It looks like we've got it going. And you're right, for checkout, in that case that we discussed, the premium goes up when that implied volatility spikes, right? All else equal. And you have a good read on that on an individual stock. So how can we tie all this in together? Kind of use the platform, the Stock Hacker specifically, to not only narrow down stocks that we might be seeing here in a given sector that might be of interest. For example, materials, communication services. We're just looking at the charts here. But then also using the Stock Hacker to put in, let's say, a 30% or roughly in that range, a 30% implied volatility level. Something higher than what we saw over here. Remember what our gauge was? Because we're just looking at something maybe performing better than the VIX itself, for example, where the VIX is for that's the implied that's the volatility for the S&P 500 index, as you can see right there, around 20. So I've just said, hey, why don't we look around the 30 range or somewhere in there? So doing that, all we got to do is go right to the scan tab. Got to make sure, though, key point, we are in the Stock Hacker right there. Stock Hacker. Okay. Now with that, what I did, this is the key point. You've got to go over here. I'm going to just kind of, let's clear this out. I want to go through it step by step so you can see everything. I'd gone through it and looked at it already. This is the S&P 503. It's the 503 right now. It varies, but it's the S&P 503. But that is the index we're in. Okay, so first things first, we want to be looking again at that group, because we do like to find companies that do have pretty good look, generally areas, indices that might have higher liquidity. These are somewhat more established companies. Obviously, they have to meet certain criteria to make it to the S&P 500. So in many cases, you're getting that with this group, right? That really helps in terms of the spread between the bid and the ask that we'll get into in just a second. But here is the scan in. That's the S&P 500. I've just gone down here and selected it. Next up, what I want to do is go to the add filter. Now, I rarely get into this, but you have to get implied volatility, you actually have to go into option right there. But it is doable. It's not the ask. Default ask, it's not going to be asked. You want to scroll right down to implied, or IMPL in this case, volatility. We're going to put that minimum in there. You can do anything you're shooting for, but generally, by the way, I've heard of investors, traders, though, and I've read about this too, that they a lot of times they say if it's not at least 25 implied volatility, a lot of times they don't try to sell options on it. Now, obviously, individuals can vary, and if a trade looks good and maybe you're fine with a 20 implied volatility, although that's all else equal, you're going to be getting a lower premium. Some traders could still be fine with that, but many times they're saying 20 to 30 is a minimum. I'll go ahead and just put 30 as a minimum right here. I'll go ahead and tab through, and that leaves this max column available right there. Okay, so if I click on that, we're going to see everything in the S&P 500 that has a 30 or higher, and we've got basically almost everything in that group. Okay, now where it becomes interesting is we have, gosh, we have a lot in there. So really the majority, but this is what's interesting is I'm seeing down here, I don't know why, but I did want to highlight it because I am not getting there's probably just different reads. But this implied volatility might be looking at different contract months, because you'll notice that it shouldn't be that way. I mean, we do have a 28 in there. We do have a 23. We do have a 22, a 26. So what I want to do is I want to choose one of these right now. Let's just use ABT. That's one in the healthcare group that it wouldn't normally have. These tend to have lower betas. They tend to have lower implied volatilities along with those lower betas. Let's look at Abbott Labs right now and just see where that stands. We've got 22.8. Okay, let's go to our trade tab and do that, ABT, and pull it up right here. Yeah, I think it's close. It's definitely below 30, but I had the minimum of 30. And so it's not giving us, it's not giving us a read that lines up just yet. It may just be my demo account, because I did some of this earlier and I had it working, but hey, it's okay. It's better to see it, right? You've got to realize what's there. We do have a great way to organize this, and I think that this column is accurate in the search criteria, which is way cool. I think in the live account, folks, you can certainly use the scan tab and the stock hacker, the implied volatility within it, right, to screen it out. But I just wanted to state that we can use this column anyhow. So let's do this. We looked at the sectors and we saw materials kind of going into a sideways channel. Let's go up top and take a look at the intersect with up top here. And I'm just going to pull an industry. We want to actually find that sector that was kind of going sideways there a little bit. I'm going to pull this up. I'm still going to run this implied volatility up top there. We do get 27 matches, but you can see right there, yeah, some of them are not within that 30 range, 30 or higher. So what we could do is we could click on implied volatility and just sort the column, and then just say, hey, anything maybe, and that's 29, that's pretty close, but anything below here in this range, maybe we just want to, let's look at what the higher implied volatility is first, all else equal, and kind of go from there. Okay, now I did scan through and go through a couple of areas as we look at this, and I wanted to just highlight first a couple of the stocks, because I did go through and I wanted to try to find something that had sort of like this similarity. The S&P 500 index, very strong, higher highs, higher lows, a sideways channel. The sector itself, as we looked at, materials really holding in there and showing some strength. But this company came up, a couple of them. And so here is CF. I want to send out a poll though. I want you guys to take a look at I want you guys to decide on one of these. And I've got one that I'm just going to go ahead and take a look at as well. But the first one, CF Industries. This is materials only. Now we could choose a different sector for sure. We looked over here and we said there were different sectors. There were different strength within those sectors, communication services. This is just exclusively right now, folks, just in materials only. That's all we're looking at this point in time. And that's exactly what we've done within our stock hacker here. And we've added this column in right there. Now, a quick note on adding that column too, if you haven't done that already, it's spelled the same way. Just right click. It's just like the Market Watch tab that many of you are used to. Just right click here, customize, and you can find it right there. Just, I'm sorry, implied vol right there. And I've added it right there after our description. That's all I've done, okay? Okay, so with that, let's look at these first two, and then we'll have a poll. I want you guys to kind of decide on which ones we could take a look at. Let's go through a few different details. And we'll have one more to take a look at too. But here is CF Industries. So clearly in materials, you can see that the company has kind of rested, come right back down. Oh, that's a pretty big pullback. It's resting right near a prior, really kind of a longer term. I mean, there's a number of different points in there that might indicate that there could be longer term support right along this level. Of course, somebody might be waiting for the possibility of a bounce first, a K hold, which we do not have today. A K hold would be a close above the high of the low day. That would likely, be like tomorrow, or I should say after today. If it were to occur, you got to close above the high of the low day. We don't have one yet, but maybe a bounce they might be looking for first. There is an earnings announcement as well, but that earnings announcement has got to pull up our implied volatility over here so we could check it out. Oh, there it is. IMP. That one does not have the L in it. So you got to remember that. It's just IMP on the charts. But look at this. Okay, so how are we doing? Pretty good, about 35, and that matches exactly what we were looking at, in our column there, in our scan stock hacker column for implied volatility as well. So see how high we are right there? So we're up nearing that range. So all else equal, it's really quite high. Okay, so we've got that. Higher highs, higher lows, the potential of a longer term kind of a flag, and you could see these flags have been a little bit longer here. Looking at a little bit longer term, you could see that, yeah, maybe just barely breaking above the range. Can we continue to break up here and kind of do maybe a zigzag higher? That is the question. And if so, we could look at maybe selling a put to try to collect income as prices are within that range, bouncing around. Now, or potentially going sideways or going higher for a possible neutral to bullish trade. So getting back to this, let's just look at the charts here. Here's 80 down here. Some support at 80, you could say. Obviously, the lower you go, the less risk you have of the price of the stock going below a strike price. So you can see this. Of course, the premium would be dipping as well. But let's just see what that premium does at these lower strike prices. Let's go over here, strike prices. Now, they are in, it looks like, oh gosh, $5 increments when you go up this high. Well, we do have a 70. Let's go back to our regular column here where we can kind of see the delta as well. So there is the 75. We don't have a ton of volume in here. We've got 3. We're in the hundreds here. The volume on this stock is normally over 1 million. So that's one thing to kind of consider. But there is, the spread on that 75 is really quite large. Let's just see, that might have just recently been added. Let's go ahead and just take a look at the weekly over here, see if anything's a little bit better. Now, we do get $1 increment strike prices here, $1 strikes, I should say. And the spreads are a little bit better, but you can kind of say that they're about 20 cents. And we do not have any open interest yet either. It's probably a new contract as of today. Yeah, maybe not. There already is open interest in there, but we haven't seen a ton of activity. So that's CF. Let's compare that with a company that's a little bit more well-known. This is DuPont. And here's the look at DuPont. A look at the DuPont chart. So price of the stock kind of zigzagged higher. We definitely broke above a longer term range here, and we've kind of come back to rest right at that level. Now, both CF and DuPont have pulled back. Materials has been kind of a leader in terms of sectors. It may continue that way. It may not, but it's interesting that we did get a new high. We're coming back and we're pulling back into a range here. Now, all else equal, folks, what happens to put prices as well when the stock pulls back? They go up or they go down? If they go up, which they do, all else equal, based upon the delta that we talked about earlier, then that could also improve premiums, right? Just generally speaking, the premiums are going up. Of course, prices are going down, but we also selected this one for higher implied volatility too, which was, I think, was in the 35 range. But that looks like kind of a bigger move, and we're kind of slowing a little bit here. But again, we have earnings, and implied volatility is really up in that range. Yeah, so there's your read on implied volatility right there, real close to 35 right there. So you're kind of towards the high end. Does that give us the potential then to sell premium at lower levels because we're getting higher implied volatility and there's just more premium? I mean, it should allow, I mean, it should give more premium in general. So maybe there's the potential for people to maybe sell down. Look at this range down here, this support level. I'm just looking at 77.50-ish. There's a lot of support down there. Again, kind of anticipating that prices can hold above that put. That gives it quite a bit of flexibility to dip down because if you hold above that level by expiration, it's just obviously more likely that you're just going to collect that premium as opposed to prices going below 77.50 by expiration. Then you're much more likely to be assigned, 100 shares for every short put of a standard equity options contract that you sell there. So let's look at the trade tab and then we'll make that comparison here and we'll take a look at it. So here we go. There is DuPont. Let's look at the monthly first. Not a lot of open interest still. Here is the volume right here. A lot of times this stock is around 1 million shares. The spreads here, about a dime. Let's see, that 70, it was 77.50. That has a delta right in the 0.2. A lot of times we'll look at 0.2 to 0.4. A lot of traders will. That's about a dime in between there. Gives it quite a bit of a range and not a lot of open interest. So always be mindful of that. But, better volume on the stock too can help to facilitate a better spread between the bid and ask as well. So having said all that, I've given us some information to look at. Of course, we could look into a lot more details and always, consider other factors such as fundamentals as well as you look into this. But I'm going to put out a little poll here, and then we'll select whichever one you guys decide. But yeah, if you can, please go ahead and vote. We'll give it about 20 seconds or so. So we've got CF for the first one, and then DD for the second, and then I'm going to go ahead and start that poll right now. We'll just select that one, and we'll go with maybe a 20-ish delta there on that as well. So very good. And so with that, we'll wait and see what our results are. Get a lot of variation initially as we go through it. Folks, by the way, as we're waiting for that, definitely, if you like this kind of content, really encourage you to subscribe to our webcasts here. Bottom right-hand corner of the screen, as you're taking that poll, go ahead and click that subscribe button. So easy to do. We have over 124,000 subscribers. Would love to have you on board. Got a lot of great coaches that just teach a lot of great topics each and every week. Great webcasts. So love you to do that. And if you like this class, definitely hit that like button as well. All right, where are we at? DD wins by 59%. It's a 59%, close to 60. So there we go. We'll go ahead and do DuPont. There's the read right there. Thanks for those of you that did vote in that poll. And let's go ahead and pull it up right now. I want to go ahead and we'll use this one for example. I want to jump into our next trade here, paper trade. So let me just show you this one. I'm going to go ahead and just choose the 77.50. And what we're really doing is we're trying to tap in to that higher implied volatility and maybe going towards the lower end, right, of the delta spectrum, where generally you don't tend to get, as much premium, but maybe with that higher implied volatility, the impact on that Vega has on it, we can scoot on down here and select the 7750. So let's go ahead and go with that 7750. I'll click on it right now and we'll see what this looks like. And as we look at this, and let's go run through a few items here. There is the break-even price, right? There is the max loss. And so this is with the assumption that the stock does get assigned at that strike price, and then DuPont goes to zero. So that's why that number is so big. But yeah, it's a ways to fall. But that is the assumption, and that's if you don't get out of the stock or anything like that. The buying power effect, margin requirement, close to 1900. It's not really a cheap stock. Well, relatively speaking, it's getting close to 100, different from those that are, below 50, for example. And there's your credit right there. Always be mindful of commissions as it might relate on these, but there's the 135. So that's over the next 53 days. And let's go ahead and just send that through. We're going to get a fill on that, probably at the mid, 140 right there. Okay, well, I'm going to go ahead and select another company. Don't really have time for a poll or to go through a couple of these, but on this one, just an example trade. This is Freeport-McMoRan. Now, this one's a little bit higher. This is almost double the VIX. This is symbol FCX. A lot more volume trades on FCX than relative to the other two. There's the volume right there, a little over 3 million shares a day as an idea, but we're getting up towards the high end, really close to 40 implied volatility. And I guess the highest is 65, but right in there. So let's look at FCX right now and see how almost something that's maybe roughly double the VIX is looking like right now. Here's FCX. Now, FCX, let's just look at this in terms of the possibility of a neutral to bullish trade. There's a little bit of a double bottom there, breaking those highs. Some call this basically, by the way, a W type pattern. Do you see it? A W, then that might work for a bull flag and a follow through there. But you can see that we're getting very close to the kind of the mid range of that W, which is sometimes where traders will look. By the way, I have a couple of points and a gap where we're at right there, but that is above 45. So there could be support there around 45. Like I said, that gap can be big for prices holding at those levels. It doesn't have to be, but you'll see that from time to time, as well as a couple points here. So let's look at that 45 level, comparing that to some of our deltas over here. So yeah, tons more volume. Look at the open interest on this. Just substantially higher. We're in the thousands now. Where does that 45 put us at? Well, it's a 36 delta right there. I'm going to go ahead and just go back to that chart real quick and just take a look. There's 45, but it doesn't mean we necessarily need to sell at that 45. There could be other areas down here if we thought there was going to be greater volatility. Remember, we did get past earnings here too on this one. So we are past earnings. So keep that in mind. So let's do this. I'm going to go over here and I'm going to go ahead and look at, oh boy, that spread is so much tighter over here too, right? I'm going to elect to go within the 20s, right? Just based on what we were discussing, a higher implied volatility. This one's closer to 38 for this month, but it gets us close to where we're looking at for a higher implied volatility. There is the 43. It's just about $1. Maybe we could get $1 for it. Open interest still in the thousands. Your delta is about a 0.24. That does give you an estimate of that there's I should say a 24% chance, according to Delta, traders might use this, that we would get below that level by expiration. As it stands right now, that number does change. But that's also a different read in terms of potential there, could say, an estimate there. But let's go ahead and click on that. And I'm going to actually bump this up to a full $1. Okay, see what kind of a fill we can get on this. So just a single contract up top here. Quick review. We've got a break even at 42. The max profit is 100, right? A delta there, we looked at about 0.24. So quite a bit low on that relative to the others. Above it, here is the max loss, 4,200. If there was an assignment, buying power effect substantially less. Remember, the other stock was about the $80 range. This is in the $40 range. There's your credit. Let's go ahead and send it through right now as the credit was shown in there. We got to fill at 1 even. And there you go, folks. So a few different things today. that we did look at. Big picture, and ultimately where we found this company was using the stock hacker, right, under the scan tab as a tool, scanning for implied volatility. We've got a column of implied volatility to verify it on our demo account here. We looked at Freeport-McMoran, we looked at DuPont as a couple of short put trades, but those that had higher implied volatility. So all else equal, potentially we would get, a higher premium that it would allow us to potentially sell at lower deltas, maybe reducing risks in terms of assignment and potentially getting the premium with that, right? If prices can hold above the strike price. So hope you found that informative and useful. Thank you, Brett, very much for your help in the chat. I think we got through. Yep, Brett's got us all covered there. By the way, Morelli says, yeah, reverse head and shoulders. A lot of times those W patterns look a lot like that reverse head and shoulders or inverse head and shoulders pattern. So a good catch on that. I think that was the one you were referring to because I kind of saw the same thing there as well. But hey, folks, it's been good being with you. Hope you have a good rest of the day. We'll see y'all next time.